Okay, guys, it's that time again. So the August numbers are out for Utah County housing market. You know, I keep adding new things to this spreadsheet because this information is just like really interesting to me. But I'm going to try to keep this video short, right? I'm going to go over some key things, but let's take a look. Let's dive in right away. All right, so for August, number of new listings, 1,245. That's a 38 house decrease from last month, so only about a little 3%. New listings last year were at 1,319, so we're actually down about 5.6% from where we were last year at this very same time. Days on market's 26. Okay, this is a new one that I added. Number of homes on market, 2,573. Okay, this is something that I'll talk about a little bit more in the next graph. That's a 0.6% drop from last month. Month supply is 2.9, so we're almost at that three-month supply mark. Under contracts, 896, which is a 22.6% increase over last month. Okay, this is a big deal. Okay, closed sales, 886, which is a 17% increase from last month. So what this tells me right here, under contracts and closed sales, right, is that homes are moving. People are buying homes still. Okay, we can see that our median price has dropped to $515,250. Okay, if you look from back here in May, so since May we have dropped 5.4% in the median price. That's 5.4%. Okay, a little bit of a drop. But if we look at for the year, we still have gained $14,250 in equity in our median price. Okay, which isn't bad. Okay, here's our UAR. So we can look at some year-to-dates here. You can see that we're still, for the year-to-date, we're still at about 2.3% over asking price for our sales price. Okay. Just in August, though, we're at about 98.5%, which August of last year was 103.1%. So a little less than 5%. So 4.5% drop from last year. So we are under 100%. So we're selling for less than asking price in Utah County for the month of August. But for year to date, we're at 2.3% over. Okay. New listings, you can see that we're really right there in the mix of where we were even during those great previous 2 years. Okay, so homes are still coming on the market. Median sales price, you can see that this is pretty much starting to flatten out. This whole year, this year hasn't been near as what it was the previous years as far as like increases. So flattening out and coming down. Days on market, you can see that we are at 26, which is a huge increase from last year when it was 16, so 10 days longer. Okay, this is a new graph, number of homes. So this line right here is the number of inventory available in the month. Okay, so you can see that last month, or July, in July there was 2,588. In August there's 2,573. Okay, these bars right here are month-over-month increases in homes, right, or decreases. So like January was minus 13.2%. So we had fewer homes on the market in the beginning of the year. But you can see starting in March, so March over February, we had huge increases. And this is over last month. So this is 48.5% over February. This is 45.8% over March. This is 56.3% over April. Okay, so those are huge numbers, right? Huge increases month over month. And we see that here in this huge incline in the numbers. Boom. But the interesting thing is the last month, so in August, right, we saw a leveling out. Okay. Now if this continues, then what I suspect will happen is that we will start to see a leveling out of our median sales price as well. As our inventory levels out, our sales price should level out, right? Right now, the sellers think they're bleeding money, even though it's not. I mean, it's only a 5% decrease. It's only a 5% decrease in the last 4 months. And we've seen 27-30% increases over the last 2 years, right? So they are losing a little bit of the equity, but they've gained a whole lot in the last couple of years, right? Okay, so let's finish this off real quick, and then we'll just have a short little discussion about what this all may mean. Okay, so here's the new listings, under contracts and closed sales. Really no comparisons of year over year. This is just a graph of the numbers, just seeing what it's doing for the year, right? So new listings, still higher than what we were at the beginning of the year, not as high as what we were back in May. Just under contracts and closed sales, we can see that those starting to come back up. Okay, so homes are moving. That's the key takeaway. There are a couple key takeaways. One, homes are moving. So people are still buying and selling homes. Okay. Two, the market appears to be, some indication appears to be leveling out with its inventory. And I suspect as inventory levels out, median home sale prices will level out as well. Can I guarantee it? No way. I have no idea what's going to happen. Right? It could go one way or the other. It could stay the same. There's no way I can predict it, but it seems to be, from the numbers, that it's starting to level out. We have one data point. Let's get a couple more, and then we can feel a little more confident in making those kind of predictions. Okay. What these numbers mean what these numbers mean if you are a seller. You still have equity in your home. If you need to sell, this is a good time. Okay? Can't guarantee what's going to happen tomorrow. Prices could go up, prices could go down, prices could stay the same. Have no idea what's going to happen there. We got one data point so far. Okay? The last 4 data points have shown that we've seen decreases in home prices. So if you're a seller and you need to sell your home, you want to sell your home or you need to sell your home, now's a good time to do it. Okay? We know what's happening right now. Let's do it right now. Okay? It's going to sit on the market a little bit longer. You're going to have to price it right for it to move, right? Otherwise, if you price it too high, it's going to sit on the market because buyers have a lot more inventory to go look at if yours is overpriced. They may eventually get to yours, but everything else is going to sell before they get to yours. Okay? But you still have a ton of equity in your property. There's no doubt about it. The last 2.5, 3 years, you've gained, double-digit equity in your home. You've got equity in your home. If you paid $400,000 for your home, and you can get $650,000, $700,000 out of your home, you can't beat that. You can't beat that. Okay. Buyers, this is a good time for you. Interest rates are a little higher, right? They're a little bit over 6 right now. They are a little higher. There's a couple of things about the interest rates. One, with the housing market the way it is, there's a lot of sellers that are offering concessions. Concessions mean they're offering you, most of the time it's money, or maybe they pay your closing cost, or maybe they give you, a certain amount of money, $10,000 or whatever, to either buy down a rate or or maybe buy a 2-1, 2-1 buy down. So 2-1 buy down, what that is if, let's say your interest rate is 6%, just for round numbers to make it easy, let's say it's 6%, you qualify for the 6%, the first year, you're gonna drop down 2 percentage points, right? So the first year, you're only gonna pay 4%. After the first year, for that next year, you're gonna increase by 1%, so 2-1 buy down. So you're in an increase by 1%. So now you're paying 5% for that second year. When that second year is over, then you go back to what you're approved for and agreed to and contracted for, which is a 6%. Now that's good if it's like higher, 7%. Well, you're at the 6% that you signed for, right? But let's say it's 4%. That's okay, because you marry the home, you date the rate. You date the rate. Okay, so after the 2 years, if it's, let's say it's 4%, then you refinance. You refinance to the 4%. Right? It's a win-win-win-win-win-win situation. Okay, and a lot of times the sellers will pay for that buy down as a concession, right? Or let's say they're offering $10,000. You take that $10,000 and you buy down your own rate of interest. That maintains that same interest rate throughout the life of the loan. Okay, let's say it's you're qualified at 6, but you buy down to 5.25. That 5.25 is your new rate for the duration of the loan. There's options out there for you guys. Okay, let's talk about what works for you. Okay. Also, I want to plug Homes for Heroes. So I am an affiliate for Homes for Heroes. I know I've done other videos on it, but if you fit into the category of firefighter, EMT, law enforcement, military, either veteran, reservist, or active member, medical field, any medical field, oral hygienist, I don't care. Whatever you have to do in any kind of health care, you qualify, okay? Or if you're a teacher, okay? Then you qualify for special things, special benefits, okay? Now I don't want to go through it all right now, but get with me and I can help guide you through that. And for me, it's money. You're going to get money. Right? I've also partnered with lenders and title company to give you discount. I can't say discounts. They're going to give you, they're going to do things to help you out in that process as well, as far as lending and as far as title, right? We're going to get you the best deals out there for being a part of this program, okay? Also, police officers or law enforcement. If on top of what I offer with the Homes for Heroes, the state of Utah offers a $25,000 up to $25,000 grant. Don't pay it back. Don't pay interest on it. You don't do anything. It's free money to you. Up to $25,000. It equates to 3.5% of the sales price of the home. So if 3.5% up to $25,000. Okay, that makes sense. All right, guys. Like I said, I try to keep this real short. So, okay, if you have any questions or want to talk about your options or whatever you want to do, let me know. I'll be happy to talk to you. We can go over some numbers. You know, it don't cost you anything to do that. It doesn't cost you anything to figure out the information. Okay. All right. Love you guys, and I will talk to you next time.